We are entering a peculiar point in time right now where the Federal Reserve knows that they cannot continue this money printing, and yet they have to continue this money printing. This should be interesting. You came here for the truth, so let me unveil that for you. Today, the first thing I want to get into is, of course, the repo crisis. This is something that began really in 2019, never seen anything like it previously. Of course, the repo operations were being done before that, but we never seen something like this. I want to highlight the fact that this is the fifth highest they've ever gone into. So we're talking about something very serious. You would get these, of course, at quarter end. These type of things do happen. There's usually a spike up, but we're not in that zone right now. And yet there's so much of an uptake on this operation that's being taken place. I've covered this extensively, explaining all the details, but right now I just need to give you an update and break down what's been happening and showing you how bad the system really is. After that, I want to get into the job situation. I want to talk about the economy. I've got a lot to cover here, so let's begin. Here we have it, the repo and reverse repo operations. I want to go down, scroll to the newest one, and you could see the delivery date and deal date being May 20th and the maturity date May 21st. Take a look. $351 billion. This is massive. Like I said, the fifth highest ever. You can see how important this has become. If you had looked back in 2019, we were seeing some big numbers, of course, and this was going and starting to escalate and starting to get worse as time went on. Jerome Powell, just a few days after this all began, Jerome Powell was there at one of his regular conferences. The reporter raised their hand. They had the microphone and asked, "What do you think about the whole repo situation?" And he said, "This is nothing to worry about. You don't have to be concerned." And that's it. They dropped it. They dropped it. And of course, this continued and continued and continued. And now we are seeing it rearing its ugly head again. I don't think people realize how serious this is. Why? Because they're looking to buy the dip. And that's what they did in the trading session. They bought into the dip, knowing that the Federal Reserve is going to print more. But this peculiar situation really puts them in a tight spot. I need to highlight all of these points right here. I'll try to cover it as quick as I possibly can because this is going to explain exactly, not my way of fumbling through everything. It's actually written out nicely right here. As repo guru Zoltan Pozsar explained on Monday, use of the facility has never been this high outside of quarter end turns. And the fact that the use of the facility is this high on a sunny day mid-quarter means the banks don't have the balance sheet to warehouse any more reserves at current spread levels. Translation, the Fed is taking treasuries out of the market through QE purchases. Okay, so they're going in and they are buying up $80 billion every single month. And they're putting them right back in via the reverse repo operation. That's the most important point. Think about what they're doing. They have completely and entirely created a mess, and they explain that here. Not only does this impair the proper functioning of the private repo market, which has now run out of collateral, as banks are now forced to repo back all the reserves they just got from the Fed back to the Fed. It also means that while the Fed still has plenty of assets to monetize courtesy of the Treasury's breakneck debt issuance spree, isn't that interesting? The banks that end up holding the resulting excess reserves are running out of space and are forced to park these brand new reserves right back with the Fed in the form of the overnight reverse repo operation. Look at what's been happening here. You got the Treasury creating all this debt. The Federal Reserve is buying that up. And then you got this madness that's been going on at levels we haven't seen before. In short, the US financial system is starting to groan at every new permanent open market operation and every incremental new reserve created by the Fed's QE, and considering that there's at least $1 trillion more in QE to go, things could turn ugly soon. That's the expectation. Okay, that there's going to be at least another $1 trillion coming. So we're going to get towards that, somewhat towards that $10 trillion mark. We'll see what happens. And the expectation is from the majority of investors that they're not going to stop, that they're not going to taper. We'll see. This, much more than any flip-flopping commentary from the Fed, confirms that we are rapidly approaching D-Day for the Fed, when the central bank will no longer be able to conduct their QE simply because there is no place to park the hundreds of billions of reserves created out of air every month, as sooner or later, someone will figure out that the Fed is buying up debt only to turn around and repo the resulting reserves each and every day, amounting to outright debt monetization with potentially calamitous consequences for yields and the US dollar. Something I highlighted in the previous video. A lot of people were criticizing me, calling me garbage and all this, but you need to understand that it is not what they tell you on the surface level. This is what's really going on. But of course, you don't have to worry, as they say right here. Don't fear the taper. Fed to dominate the Treasury market for years. Bank seen rolling over its massive debt stockpile for years, expected to keep yields suppressed even amid inflation fears. And I do think they're going to go for some sort of yield curve control if they're not already doing it. I got a lot of complaints about my head being in the way. Don't worry, I'm not blocking anything. Nothing relevant, please. The Fed is definitely not going anywhere anytime soon with regard to the Treasury market. They predict the Fed will begin tapering its purchases in January 22nd and end them around November. Can you believe that? But he expects the central bank to keep its stake steady through the next 4 years. So they're going to hold 20-25% of the Treasury market, keep it there. So they're not going to necessarily sell off. They're going to keep it there. And actually that may be possible depending how the market responds to that. I think it's important to note this because of how dangerous their actions are. Now you're looking at the jobless claims drop more than expected for a new low. All right, you've seen this before, and here's the chart form. As you can see, this just showing you as time has gone on over the last year, this has declined. However, there are still 16 million people who are getting some form of unemployment insurance, emergency insurance, and all this stuff. So you know that there is a big demand, and that's the people that come up on the statistics. Of course, it's a lot worse than that. This is just more of the same data. Initial claims for unemployment insurance, obviously it peaked out right there in around April, and it's been declining ever since, and that's the expectation that it would continue to do so. Continuing claims, they're showing you at 3.8 million. 3.8 million, still quite a big number in that one particular instance, but we know that people are underemployed. We know that people's salaries have absolutely not been keeping up as prices have been rising and so on. But hey, don't worry, it's only temporary. Lumber futures swing 10% in wild session as speculative frenzy ends. So as I did the interview just a few days ago now with Uneducated Economist, he was talking about lumber at 1700, probably, I think it was 16 or 1700 being the peak. And you can see right here, it had fallen to 1200, but it rallied 5% by the afternoon. And everything was basically up in this particular trading session. Housing is so hot that US builders have to stop taking orders. I mean, the words, there's no words that are coming out right now. Long waiting lists, rising construction costs, and labor shortages send new home prices soaring. And of course, you could read the article. You know what I'm getting at with this one. I don't want to just beat a dead horse with all this stuff, right? I'm just giving you updates, letting you know what's happening, ultimately covering the most important thing up front. US proposes a global minimum corporate tax rate of 15% with an eye on something even higher. That's what they're pushing for right now. You've got problems, you've got deficits, you've got debt. And then, by the way, the Treasury trying to, make sure somebody buys that debt. But as you can see, that it has actually declined. So the Federal Reserve has been making up for all of those buyers that are not coming to the table, not purchasing it. It's not right. That's something that is unsustainable. So they want these corporate taxes because they have to pay. How does that work out for these countries like, let's say, the Cayman Islands, which has always been opposed to this type of taxation, and they want other types of taxation instead? So they have a zero corporate tax, zero personal tax, and so on. There's many other countries like this, and they actually benefit from different types of sales taxes, okay? And there's other countries that do the same thing. And now, there's going to be pressure put on them from the US and so on. But ultimately, what does it benefit the average US citizen? If you think that it will benefit you, really, realistically, it won't. Okay, I don't want to, burst your bubble or anything. This is statistically, historically, just not going to happen. U.S. Treasury calls for strict cryptocurrency compliance with IRS, says that they pose tax evasion risk. They are pushing absolutely for this. The markets did respond to it, of course, and there is always that concern of how it's going to be regulated and so on. This is where they are going with it. I don't know if they can actually manage that, but we'll see. And then just a couple quick things I wanted to note here. This was unbelievable. Just this image right here. Now you're seeing a lineup in front of the houses. This is for an open house. That's the level of demand. Look, it's just a regular house. It's probably a nice house. Looks nice, but it's just a regular house. And yet the demand is just red hot. And this is small towns. Small towns. Remember that. A lot of people criticized me and said, oh, you keep on cherry picking Toronto and New York and San Francisco. The frenzy is now everywhere. Look, in Phoenix, $1 million homes can't sell fast enough. The city's high-end housing market has seen a surge in out-of-state buyers. This is going on like crazy. Let's switch gears really quickly. I want to move through these as fast as I can to get you what you need to know. Coinbase's stock bounces after bullish calls from Wall Street analysts. The stock was going down and down and down and down, and now apparently they're pushing it again. I had also noted, I didn't cover it in here, but you're looking at IPOs now being able to be purchased by Robinhood traders. So the most retail of retail traders are going to be able to get into IPOs, which, by the way, there's been such a demand for with SPACs and IPOs and so on, and yet the performance has been horrible, absolutely horrible, okay? And then last but not least, just a little bit of humor before I talk about the insights, which I should have covered earlier. But look at this. Bitcoin obituaries. Bitcoin has died 414 times. This website here is 99 Bitcoins is actually keeping track of this, which I find funny. And these are just all different articles of every time the mainstream media has talked about this. And that just shows you what the mainstream media says is never, never, never to be taken at face value. That's the point I'm trying to get into. So let's break down what's happening with the repo market and how that affects you. Number one, the repo market is absolutely active right now. It's hyperactive, in fact. Number two is that the Federal Reserve, by doing the overnight operations, by doing all these different activities, whether it's the QE, buying up the treasuries, buying up the mortgage-backed securities, there have been many people on the inside of all of this that have said and screamed how the Fed is creating a big, big disaster down the road. And number three, I made it pretty clear in that whole write-up that was there that the day of reckoning is upon us. And you as an individual, you need to prepare as a result. If you see something coming down the way, you need to be ready for it. Do not wait for somebody to wave a flag, for some sirens to go off, for it to be very obvious. Things can unfold in an instant. You better watch out. If you're that type of person who's got money in the markets, make sure you got your stop losses in. Do not have any money in these accounts that you just leave there because just in case. Make sure that that is somewhere that you deem safe. okay? Because none of these accounts are going to be able to, you know how many times they stop trading, they halt trading, people can't get access to their money. Where is your money being kept? Is it under your mattress? Is it in a safe deposit box? Is it being held in gold and silver? Is it in the stock market? Where is it right now? Get that all sorted out. Now is the time. It's better to be too early than too late, I assure you. My friends, I want to tell you something. If you want to communicate with me directly, this is the way to do it. I'm going to send you 5 days a week this email giving you the daily video. Later on, it's going to be a newsletter with actually content around it. But for now, instead of procrastinating like I've been doing for years, I need to get around their systems. I got big plans. I got big plans coming in for what I'm going to do. Okay? There's big plans. Let me tell you, I'll just say it right now. I've already mentioned it in the comments a few times. The ads are going to be turned off. I'm looking at alternate sources of revenue. I hope you support me on this. This is going to happen. We're going to go around with the insiders, getting directly to you with the emails. We're going to find alternate ways of making income here. And I'm going to try and hire people, trying to make this business that can actually support an economy in my own way. Okay, I'm going to try to do what I can to make this a better situation for everybody. Okay, I brought the green screen, trying to do whatever I can. I'm trying to do whatever I can. I'm listening to the people. I'm listening to the subscribers. I really appreciate each and every single one of you. If you want to sign up to the insiders, of course, it is absolutely free. That's my way of getting to you at themoneygps.com. If you found the video informative, hit that thumbs up button. I really appreciate it. And if you haven't, definitely watch this video about the repo crisis and get into the details you need to know. See you there.